SVB, or the Silicon Valley Bank, and Signature Bank failed so swiftly that they may have been textbook examples of traditional bank runs in which a large number of depositors take their funds from a bank at the same time. With the fall of the Washington Mutual in 2008, the failures at SVB and Signature were two of the three largest in U.S. banking history. U.S. President Joe Biden has guaranteed that the banking system in America remains resilient. He emphasized that Americans should have faith in the U.S. banking system. He also said that he wants tougher regulations to prevent future crises, like the one witnessed in 2008. But it's repeated itself in 2023. Biden added that the government is ensuring that Silicon Valley Bank depositors get their money back and that no losses will be borne by the taxpayers. Now, what's this entire aspect and the background to SVB? The Silicon Valley Bank started way back in 1983 in California. It's the 16th biggest bank in the United States of America. Known as the go-to bank for investors, startups, tech firms, cryptocurrency were among the depositors. Invested in Sequoia Capital, Axel Partners, and Greylock. So what happened that led to SVB's collapse? SVB invested billions of dollars on US government bonds. What appeared to be a safe investment quickly unraveled as the Federal Reserve aggressively raised interest rates to combat inflation. Bond prices declined when interest prices rise. Hence, the rate increase undermined the value of SVB's bond holdings. At the same time, the Fed's rate hikes increased borrowing costs, forcing tech businesses to devote more funds towards debt repayment. At the same time, they were having difficulty raising new venture capital money. Companies were forced to use SVB deposits to fund operations and growth. Customers panicked and they withdrew enormous sums of money. The bank's stock fell 60% on Thursday, dragging down rival bank shares as investors began to fear a replay of the global financial catastrophe a decade and a half ago. Trading in SVB shares had ceased by Friday morning, and the company had abandoned efforts to raise funds or even find a buyer. Now, the problems for SVB are vast majority of deposits are uninsured. No buyer for Silicon Valley Bank. So, is Silicon Valley Bank collapse worse than what happened in 2008? Well, experts feel that the impact may not be as grave as back in 2008. The SVB largely dealt with startups, so base was limited. Stress test by the Fed shows large banks could survive recession. The impact on markets. APAC markets or Asia Pacific markets tumbled in trade. Deep losses on the Wall Street were recorded. The Feds may pause an interest hike again. What's the impact on India, ladies and gentlemen, of the Silicon Valley Bank collapse? The impact on Indian startups exposure could be between $2.5 to $3 billion. Startups could face trouble raising funds. Bluestone 197, Bharat Fin, inclusion, they have exposure. Now, what's the impact on ground? We'll have to wait and watch. So far, it's in the range of $2.5 to $3 billion. Raising funds could be difficult for startups in India, but largely they seem to be insulated from this crisis with the SVB. Moving on.